The US economy in 2025 is like a patient in recovery, walking, talking, but still wincing from the surgery. Inflation has cooled, unemployment remains low, and Wall Street's holding steady. Yet most Americans feel poorer than ever. So what's really going on? Is America heading for a soft landing, or just the calm before another storm? Let's break down the real state of the American economy. 1. Inflation is down, but prices aren't. Let's start with the most misunderstood number in economics: inflation. Yes, inflation has finally cooled below 3%, a massive relief after the painful surge of 2022 and 2023. But the problem isn't inflation itself. It's that prices never return to where they were before. Even as the rate of increase slows, the cost of living remains permanently higher. The $5 gallon of milk is still $5. Rent hasn't dropped. Insurance premiums are climbing, and grocery bills make people double-check receipts like it's a math exam. Economists call this price stickiness. Companies raise prices quickly during crises, but rarely lower them afterward. And consumers, trapped by higher baseline costs, feel poorer even when paychecks grow. That's why the government can declare victory over inflation, but families still feel defeated at the checkout counter. 2. The job market looks strong, but feels weak. On paper, America's job market looks like a success story. Unemployment hovers around 4%, job openings remain plentiful, and wage growth continues modestly. But beneath the surface, the landscape has changed. Many new jobs are part-time, freelance, or service-based, not the secure, benefit-packed careers that once built the middle class. Meanwhile, automation and artificial intelligence are transforming industries faster than policymakers can adapt. Customer service chatbots, AI accountants, automated warehouses. The march toward efficiency is relentless. Workers aren't just competing with each other anymore. They're competing with algorithms. So yes, people are working, but fewer are building stable lives. The jobs exist. The security doesn't. 3. The wealth divide keeps widening. America has always had inequality, but the gap today is staggering. The top 10% of households now control nearly 70% of all US wealth. The stock market has soared thanks to tech and defense companies, yet most workers own little or no stock at all. Meanwhile, personal debt is exploding. Credit card balances have surpassed $1.3 trillion, the highest in history, with average interest rates above 20%. Car loans are stretching to 7 years, and buy now, pay later apps are quietly fueling a shadow debt bubble. The wealth divide isn't just a moral issue anymore. It's an economic one. When so much income is concentrated at the top, spending power dries up at the bottom, slowing growth across the board. This is why Wall Street feels bullish, but Main Street feels broke. The recovery exists, just not for everyone. 4. Housing the locked-in generation. Few markets reflect America's contradictions like housing. Mortgage rates, now between 6% and 6.5%, have cooled demand, but prices haven't fallen much. That's because supply is frozen. Millions of homeowners are locked into 3% pandemic-era loans, unwilling to sell and double their mortgage costs. Economists call this the golden handcuff effect. As a result, inventory remains scarce, builders can't keep up, and first-time buyers are priced out. Renting has become the new normal. The dream of homeownership, once the cornerstone of middle-class life, now feels more like a fantasy for many millennials and Gen Z buyers. Some are turning to creative solutions, co-buying with friends, moving to smaller cities, or joining rent-to-own programs. But the bigger truth is this: America isn't short on houses. It's short on affordable ones. 5. Government spending and the debt spiral. While families tighten budgets, Washington continues to spend freely. The national debt has crossed $35 trillion, and interest payments alone are now among the government's largest expenses, nearly rivaling defense spending. Both major parties talk about fiscal responsibility, but neither has delivered it. Stimulus programs, infrastructure bills, defense budgets, and social spending have all ballooned. And because much of this debt was issued when rates were higher, refinancing it costs more every year. This creates a dangerous cycle. The government borrows money to pay interest on the money it already borrowed. So far, markets have tolerated it because the US dollar remains the global standard. But the question isn't if debt becomes a problem, it's when. 6. Wall Street's boom versus Main Street's reality. Stocks are thriving. The S&P 500 and NASDAQ are near record highs, driven by AI, energy, and defense firms. But the wealth isn't trickling down. Large corporations, flush with cash and automation, are posting record profits, even while cutting jobs. Meanwhile, small businesses are feeling the crunch of high borrowing costs and slowing consumer demand. Many family-run stores, restaurants, and local manufacturers can't compete with chains that can absorb inflation better. The great American small business, once the symbol of economic resilience, is quietly disappearing from downtown streets across the country. The divide is simple. The economy works beautifully if you own assets. If you don't, you're just trying to survive inside it. 7. Trade, tariffs, and global shifts. America's relationship with the world economy is changing again. President Trump's new wave of tariffs, a 10% baseline on most imports and up to 35% on select countries, has reignited the America First debate. Supporters argue it's protecting U.S. manufacturing and punishing unfair trade partners. Critics warn it's raising prices and sparking retaliation abroad. Already, imported goods like cars, electronics, and food are seeing price bumps, while foreign markets are imposing counter tariffs on American exports. The global order that once favored free trade is fracturing. For decades, cheap foreign goods kept U.S. inflation low. Now, protectionism is bringing jobs back, but at a higher cost to consumers. The question is whether voters will accept that trade-off. 8. The energy and AI boom. One of the bright spots in the economy is technology, specifically AI, automation, and clean energy. Investments in data centers, semiconductor plants, and renewable energy projects have surged. States like Texas, Arizona, and North Carolina are turning into new industrial powerhouses. This wave of innovation could spark a long-term productivity boom, but only if it creates jobs that regular Americans can access. Right now, the future looks promising, but unevenly distributed. 9. The real state of the economy. So, what's the verdict? The American economy in 2025 isn't collapsing, but it's not thriving either. It's stabilizing, healing, but slowly. Inflation's down, jobs are steady, markets are high, yet people feel poorer. That's the paradox of this era. The numbers look good, but life feels harder. The recovery is real. It's just not reaching everyone. The state of the American economy is ultimately a story of resilience, but also reckoning. The US remains the world's largest economy, but its middle class is shrinking, its costs are rising, and its patience is wearing thin. Whether America enters a new age of prosperity or drifts into decline depends on what comes next. Smart policy, honest leadership, and shared opportunity. Until then, the economy isn't broken. It's just